Salute, buongiorno. Maria, Lizanne, Larry K, Stuart, Becky, Ross. Where are you now? Where are you guys? Why is it that no one is seeing what is so obvious? Numbers don't lie. It's easy to report what has already occurred, so report it correctly. Because accounting assumptions mask reality in order to normalize earnings. Intelligent investors realize this. That is why I look at changes in cash and cash equivalents on the balance sheet. Whether it's a privately held company, publicly traded, it doesn't matter. You can't have cash for me. It's either there or it's not. Change in cash and cash equivalents, Q2, as reported last month in their 10Q filing, Procter & Gamble up 804% over the same quarter last year. Kimberly-Clark, 259% over the same period. In 4 weeks, Q3 closes. I guess that's what everybody's going to need to see. Because I expect confirmation of continued accelerated earnings growth. Procter & Gamble growth rate, 3,200%. K&B, a little over 1,000%. Maybe even more if revenue is sustainable, which I think it's not only sustainable, but it's getting ready to surge further. Why? It's not a fluke, folks. The perfect storm was the COVID pandemic, which was the catalyst for changing these boring old school consumer staple growth stocks into growth stocks, thus creating the perfect investment of all time. Low beta, less than half of the market, dividend yield of 3%, which by the way is 250 bips over the 30-year treasury yield. These numbers do not even reflect the tsunami, which is now visible offshore, at least to me in Sicilia. These numbers don't reflect the 300-foot wave called the world baby boom, which is about to come crashing on the shores, driving earnings growth indefinitely when more lifetime customers are born. World baby boom birth rate, the actual growth rate is really discernible from here. However, I think it's going to be a big, huge population increase beginning in November 2020 through February into next year. I would expect that earnings would even continue to grow at fantastic rates because why? 78% of the world's disposable diaper market happens to be Kimberly-Clark and Procter & Gamble, which sells brands, leading brands, like Pampers, Pampers Newborn, Huggies, Loves. It should drive earnings indefinitely as babies become new lifetime customers. In case you didn't hear that, that's right, 78% of the world's diaper market these two companies control. So if you thought COVID was a catalyst, wait till the world baby boom kicks in. You don't have to wait long. Mr. Market in the short term is a voting machine. In the long term, Mr. Market gets it right because it's a weighing machine. The stock price will eventually reflect the true fair market value of the business, which is presently priced at 10 cents on the dollar at current stock prices. Investors should be very cautious right now, chasing the high flyers, which may be fairly valued or overvalued. I, for instance, sold my Amazon, Visa, Apple, Microsoft stock. And by the way, I paid $24 for Microsoft when everybody thought it was going to go out of business, which it wouldn't when 85% of the world's business owners use Microsoft. They're not going to change something that works. Anyway, when I sold all those stocks, I generated $2 million in capital gains, and I reallocated everything into @TradeOfCentury, which is the Twitter handle. Specifically, I invested this money and a lot more into the 2022 leaps for both companies, giving me 500 plus days for Mr. Market to be righteous and to price these companies fairly. In fact, the high flyers that I just mentioned previously have far greater downside risk at this point than upside return, whereas the other two stocks are Kimberly-Clark, Procter & Gamble, to be specific, are hugely undervalued. The upside return is enormous with little or downside risk. Why? Earnings are not suspect. They're real, they're sustainable, they're confirmed, and growing. We're all the brilliant money managers right now. Why is no one paying attention to all the facts? Why am I the only one? Especially guys like Bill Miller, Bruce Sherman, now building, ironically, a house in my neighborhood in Boca. Ron Barron, George Soros, John Paulson, Stephen Cohen. And what about the Peter Lynches of the world? These are all great managers, we know that. So if you're not paying attention, hopefully one of your social media empowered employees that will prove to be invaluable, and I hope you give them a big fat raise when they bring this to your attention, because obviously you guys have missed it this far. Remember, my career as a money manager developed and spanned over the same time as yours. That's what's so funny. I'm a classmate. The people I mentioned earlier at the beginning all know who I am. You may recognize my face from many years of impact conferences, TD, Barron's, FBA. I'm no different than you, except my eyes are always open, especially to reality. My thesis was published on April 5th. We can go through hell for the last 3 months. I found 50,000 reasons to do it, not one single one. No one can tell me why it doesn't make sense. Those who know me knows that I have ridden this horse many times. This isn't my first rodeo. Free cash flow yields of 12% are rare. Last time I saw it, McDonald's, when we paid $9.50 at my firm, it's now over $200. And that was back in 2002, I believe. Free cash flow yields of 12% are rare, meaning mispricing is verified. Mr. Market will eventually get it right, but will you be smart enough to allocate your capital now before it's too late? Open brain, open eyes, open wallet. Pick up the money that is before you. This is my last social media posting. Never did it. Never had anything to say. Don't know how it works. Don't care how it works. So goodbye forever. And for all those wondering why I'm bothering, this blows me away. And what's in it for me, and why I pay for Twitter ads, and all of you Debbie Downers, bafangu. To the rest of you, my friends, arrivederci, ciao, Godspeed. Salute.